The digital age has changed how we use money, how we spend, borrow, save and invest money. In this week's Spotlight, Don Tan finds out how the banks and fintechs are tempting customers with technology.
Our Taitse has made a career out of creating wealth for others, with over a decade's experience in fund management. Today, he's the co-founder of Auto Wealth, a robo-advisory service that uses an automated platform to assemble portfolios for retail investors. He says it all started with a plea from a friend to help him make some money.
A friend whom I only met twice handed me a $200,000 check over the coffee table. He told me, "Taitse, I'm very serious. Please manage my wealth." So that night, I couldn't sleep. I told myself, if there is a point of time where I'll leave my corporate career and help the people around me, this had to be the time.
Taitse quit his job the next day and started the predecessor company to Auto Wealth. Today, assets under management number in the tens of millions, and its international client base continues to grow. As smart technology gains a foothold in finance, it's quickly transforming the way traditional banks do business. That includes wooing bank customers with digital money management. Singapore's largest lender, DBS, recently launched its latest tech tool, a digital financial advisor. Your Financial GPS claims to be Singapore's first holistic digital financial advisor, which allows customers to better manage finances and plan their financial goals. DBS iWealth, a digital wealth management platform, also allows customers to manage portfolios remotely, anywhere and anytime. But it also has its sights on the rise of the robo-revolution. Artificial intelligence to manage wealth, a digital tool that is upending the investment landscape globally. And they're not the only ones.
We strongly believe that AI at this point of time has progressed enough that it's going to have material implication on all aspects of banking, from the way we interact to our customers, right to the way we do our back-end operations.
An example of that is Emma, the bank's AI-based chatbot that has generated more than $150 million in home loans since it was rolled out in 2017. OCBC is so driven to the potential of AI that it has set up its own in-house AI unit. The goal? To drive the adoption of AI across banking services, such as wealth advisory and loans financing. And after a one-year pilot, OCBC is ready to roll out its own robo-advisory platform to clients this year. But what should customers consider before using robo-advisories for wealth management?
One of the important areas that consumers need to be aware of touches on two elements. One in terms of use of the data that they're actually providing, and the second one in terms of privacy. From the robo-advisors that effectively are a set of rules, which are mimicking a set of rules that as a human advisor provides. Now, it's really important as we kind of go up that ladder of the AI component, there is that need to share data, and the consumers need to be comfortable in how it's been used, and there's a trust that needs to be developed effectively.
Think of digital wealth management in these terms. It used to be that if you wanted advice on money management, your bank would refer you to a wealth manager, and the bank would charge you a fee for the service. But by collating the answers to a few key questions, data analytics can quickly create a 360-degree view of you and the best portfolio to suit your goals.
As our lives become more digital, customers have also come to expect more personalized financial solutions that are based on their own life goals. So today, well, banks are going beyond using innovation to complete all those simple, mundane payment transactions. And just like fintech companies, they've started to use innovation as a tool to do what only a professional human being used to be able to offer. And the landscape, well, it's changing rapidly from high touch, in reference to basically all those clients with loads of money, to high tech instead. And the aim is to give you advice on how to invest and to grow all your money. But how much artificial intelligence is really involved?
If you ask 10 people what AI stands for, you'll get 20 different answers. And that to a certain degree gives you that understanding of it really depends on the financial institution. Now, as a broad, generalized stroke, I would say that fundamentally, the use of AI within wealth management isn't that large. It is more of the usage of automations, rule, expert-based systems. Now, whether or not you put them in the bucket of AI, like I said, you can cut a cake in many tiny forms.
For us, smart digital advisory is all about democratizing wealth. We were able to help you to say, maybe you are spending a bit too much this month. Over the last 6 months, you were spending at $100. This month, it's $150. We'll alert you. Only digital can help us reach out to a larger set of customers and help them make better decisions.
And traditional banks have good reason for concern. Fintech has gone from virtually non-existent to a $120 billion industry. That's all in just a few years. And analysts say more explosive growth awaits, with global fintech revenues poised to rise 3 times as fast as traditional banking, reaching $265 billion by 2025.
With so many of the banks continuing to push towards optimizing just how they use your data, the question is going to become, what's going to happen to all those human wealth managers? Well, it might not be over for them just yet. For now, the consensus seems to be that a type of hybrid model is most likely to succeed, a combination of human wealth advisors as well as robo-advisory. Because as for performance, there's very little data on whether robo-advisors outperform human advisors just yet. And that could be food for thought for you as you make those choices. After all, it could make or break your portfolio.